Hey, welcome back to Milton Daily Homes. It's Chuck here, and we got a pretty neat episode today. We just found out about some mortgage rules that have changed, and we got 12 properties as well. So anyhow, buyer class is next Thursday. If you want to sign up, the link is over there, and we'll get right to it. First one up is 121 McCready. It's at 389.9, and it looks like there's 2-car parking in the driveway. I mean, the whole house looks pretty neutral. It's actually a good day today for sort of move-in ready homes. A lot of them have really done a nice job getting prepped up and getting all set. So it looks like there's a finished basement with a bathroom down there, which always helps. That home's probably 1,600 square feet. Not so bad at all. McNair Circle, there's no photos on this one. It's at 409.9. And so it looks like it's the 3-bedroom version of the Mattamy Spring, I think it's the Spring Ridge, 1717 square feet. I do know that. And it looks like it's carpet inside and might be a little bit high. If it's really well decorated inside, they might have a shot. Hallway is at 414.9 and it's 1,800 square feet. It's a nice open floor plan. There's 9-foot ceilings, so even if you're a townhouse, I find if you have those 9-foot ceilings, you feel a lot more like a detached home. And yeah, so that's basically it. That's your main floor right there, and there's an eat-in kitchen, but you don't really have a formal dining room. They're built more long and narrow. Whenever you have a 23-foot frontage and the garage takes up a couple feet, and you're usually, if you're an end unit, you might have 2 or 3 feet, but you're attached on both sides. So anyhow, it's a good looking listing. Again, move-in ready as far as I'm concerned. Gaisley Circle is 417. It's a 1,600 square foot home. It's called a Longford or a Longmore. I always mix them up. Spring Ridge, Springdale, Spring Valley, Longford, Longmore. Mattamy likes to kind of mix this up, and then with the spirit plans, they just number them. Plan 1, 2, 3. Hard to tell, but it's one of my favorite semi-floor plans. It's 1,600 square feet. You've got a little breakfast bar right here. You've got a nice size family room, and then you also have a separate dining room that still interacts with the rest of the house. It's just on this side of the kitchen. So that wall is actually the wall for the kitchen. Then you have your family room just over on this side here. So finished basement, nice lookout windows here. Gaisley Circle is nice and quiet. It's a great street. And the rooms are all good size too. Some landscaping in the back. This one is all set. Nice price. It's going to sell for very close to this. August 29th is their magic date. Now Bonning Crescent is 419. It's a townhouse, and you'll notice it's a 27 by 121 foot property, and it looks very nice from the curb. It's got nice appeal. And when we look inside, we can see that there's even more good stuff here. There's your kitchen. You've got a nice, it looks almost like a quartz countertop, could be granite, undermounted sink, stainless steel appliances. It's working it. So yeah, nice stuff. Finished basement here. Now that sloping berm, what's behind here is the train tracks. So you do get a deeper lot, but the actual usable space is probably 80 to 90 feet. And do you hear the train? Yeah, you do. I mean, a lot of people who live close to the train tell me that they really don't even notice it after a while, but I can't speak from personal experience, so it's very hard for me to tell. But that is something you'd want to look at. It might be fun to have the kids do some tobogganing down that hill. And so Yates is the next one, 439. Now we're looking at a smaller detached. It says it's more than 1,500 square feet, but I would question that if I was the buyer of this house because I believe it's smaller. And so the kitchen's a little bit small. You've got a little pot light right here to help you work over the sink. And yeah, so you know, it's an eat-in, and then there's one room as far as I can tell on this one, this room right here. So I believe it's called a Baker model, but don't quote me on that. And a lot of people say, you know, do detached go up more than semis or townhouses? I've alluded to this before. I pulled up the actual report here. So when you look at this, the single, the semi, the townhouse, otherwise known as a row or an apartment, look at what happens. The appreciation, when we talk about from 2006 to 2011, And we're crossing a lot of boundaries here. So this is for all over southern Ontario. It might even be Ontario. They didn't specify. But you really see that there's very similar trends happening with these. The detached goes up a little bit more, but it's really, I find, inconsequential when you look at most of these are kind of going up at the same rate. And we do find that the markets do tend to float at the same level, pretty much whatever kind of home that you have. Generally, freehold do go up more than condos as a quick trend, and detached a little bit quicker than the rest, but not that much. Ellis Crescent 478.8. Double car parking in the driveway. It looks like we've got patterned concrete outside, and again, another pretty good looking home inside. The hardwood. I mean, that's kind of a crummy angle for a bathroom, but it is what it is. Bit of molding upstairs, and then you've got a finished basement, and you've got a decent looking yard too, and there's a pretty good amount of space. It's 116 feet deep, so I think these guys are going to do well. The finished basement, everything is really clicking well. Rule is at 479.9, and I could have sworn this one was sold. So when you look at this one here, you've got some nice cabinets, you've got the extra pantry plus the island. Those were all upgrades from the builder. And then you've got your family room. There's a separate dining room in the front of the house. It's 1,600 square feet. There's a loft upstairs plus 3 bedrooms. Hardwood stairs is always good because it's very hard to do that after the fact. Glass shower here. Now that's what you face onto. So I would guess at some point there's going to be some building happening. You've got a huge amount of mailboxes. It says fronting onto green space. That's a bit of a stretch from my eyes. There's a walkout basement, and then it's a pie-shaped lot, and it sort of extends out pretty far over on this side. So, you know, it has some value. Typically, these ones are selling, you know, at $450, $455, $460 for nice ones. The walkout adds value. The extra lot adds value. You're going to have to put fences in, probably some window coverings. At least they have some appliances, which is good. So they're probably going to do okay. I thought it was high when it first sold a couple months ago, but I think we've seen the nice appreciation since then, and they're probably in a pretty good place. Now, Giddings is $499, probably linked by the foundation here. It's close enough to the neighbor that the builders may have actually put a link in between them. But for all intents and purposes, it feels like a detached home. And so you've got some great wainscoting here, beautiful finishes. Well decorated. So when we talk about a lot of today's homes, they're really set to move in, and whenever you have that, obviously it's doing good things for the values. 4-bedroom on this one, 2,200 square feet, and I think that's a pretty fair range. Being under 5 is definitely the place they want to be. Chuck pick of the day goes to this one on Savaline at $499.9. It's a Quincy corner. I've always said that the best angle to take on this one is go about 90 degrees over and then get the double car garage, because a lot of people don't get that right off the bat, that this is a double car garage home. And nicely finished inside. You get some hardwood floors. So that's the front of the house. That's the part that sticks out. So it's a combined living dining room. And then you've got a good looking kitchen here, plus some extra pantry space. A lot of people don't do this pantry, and it has a huge effect because there's not a lot of cabinet and storage space in the kitchen. You've got your California shutters, nice neutral colors, well decorated. It's the 3-bedroom, so they can fit a queen size bed in here. Upstairs feels a little bit more spacious. There's also a laundry. These do come in a 4-bedroom, but I tend to like the 3. It just gives you a bit more breathing space. Your ensuite is far bigger in the 3-bedroom, so that glass shower is definitely nice. And they've got a little pergola outside, so great looking deck. This one is hitting hard. I would not be surprised at all if it sold for more than asking. I've seen models, what I consider to be inferior than this one, selling well up into the 5. So this is, in my eyes, underlisted, undervalued, but it's a good opportunity for a buyer. So if you want to see it, give us a call or send an email. And Grant Way is at $499, and so we're looking at a 4-bedroom on this one here. Again, it's very nice inside. I would still take the one on Savaline without a doubt. But move-in ready. This is a good list today if you just want to go into a home and not do very much at all. And we've got one on Pettit Trail with no photos. It's at $598.9. And generally, I'm a big fan of Pettit Trail. This one has a finished basement. It's a double-car garage. We know it's at least 2,500 square feet. It could be anywhere in that zone. And yeah, so hardwood floors. Not much to go by really. The 9-foot ceilings definitely helps. There's 2 beer fridges plus a wine rack. There you go. That's something that most buyers would consider important. Now, the last thing I want to share with you is there's some very important news about what's been going on in the mortgage industry. So what I wanted to share with you is that just this morning, Ottawa has announced that the maximum amortization for mortgages is no longer going to be 30 years, it's going to be 25 years. So what that means is your monthly payments are going to be a little bit more, but what it also means is you're going to pay off the mortgage a little sooner. So we know that they can't change interest rates right now because there's a lot of stuff happening economically that just prevents them from doing that. So this is their way of saying, okay, we're just going to slow you guys down a bit. And so I think the housing market's going to respond drastically to this? No, it might shave some of the edges off some of the people who really needed the 30-year mortgages. I think it's going to be good news for the lower price ranges because that's actually going to keep the same payment, people are going to have to reduce their purchase price a little bit. The maximum amount of equity homeowners can take out of their home. So if you're an existing homeowner for a refinance, you now need to keep at least 20% in instead of having 15% in. So that's a good change too. It's encouraging people to save more. Now, what it also really means to me is that when you can borrow money for so cheap, does it make sense to put all of your money into your mortgage? I mean, obviously you have to fulfill your monthly obligations, but can you invest in another place besides your mortgage that can really do good things for you? I believe the answer is yes. But the lesson we learned from our parents is pay off your mortgage as soon as possible. Not always the best advice, sometimes good, but I think in this case, knowing that you can't really get it out very well and there's no internal rate of return on that money that you've saved in your mortgage, I just really think that opening your eyes to some other possibilities can really benefit you. Now, they're also looking at maximum gross debt servicing ratios at 39%. So what that means is your housing-related expenses compared to your income, and what we call that is your mortgage, your taxes, and your heating, is going to have to be 39% of your gross income, and what we call total debt service is fixed at 44%. So that means all of your extra car loans, your student loans, all that stuff cannot be more than 44% of your actual borrowed amounts, or like your housing related plus your debts can't be more than 44. That's a good way of saying it. Now, government-backed mortgages will be limited to homes. So when we talk about CMHC insured mortgages, so if you're buying a home for $1 million or more, you basically have to put at least 20% down. So they're not insuring mortgages above that rate, and probably a good thing. I remember the days when you could buy $1 million house for 0 down and do it on a 40-year amortization. Those days are gone, and that's probably a good thing. Generally, I don't think that's going to affect that segment of the market. Most people who buy $1 million house have equity, have at least $200,000 in savings or net worth that they can apply towards the home. So anyways, these changes all happen on July 9th, so they're putting it out maybe 3 weeks from now or something like that. What it means is if you're thinking about buying a home, you want to keep that 30-year mortgage, which lowers your payments a little bit. You definitely want to jump on board soon. So if you want to meet with us, if you want to start your housing search a little bit earlier, then you can definitely do that. So give us a call, and actually someone's giving us a call now, so I better get going. Have yourself a great day, and we'll talk to you soon.